Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Pick. I am Jeremy Mullen along with Ian Feller, who will have his pick shortly. But first, we will be doing Intuitive Surgical, ticker symbol ISRG. Intuitive makes robotic surgery systems that help doctors perform minimally invasive procedures. Their flagship product is the Da Vinci robot, which gives surgeons better vision, control, and precision than traditional surgery. Now, Intuitive just crushed earnings and the stock jumped back to summer highs. So now investors are watching to see if we can hit new all-time highs by year's end. Now, a little bit more about the company. Let's look at the profile page here. And we can see it's a Zacks rank number 3 hold. Beyond surgery, the Intuitive also sells the Ion system for minimally invasive lung biopsies, plus a full range of instruments, accessories, and vision tools. The company generates revenue through services, training, and support, and sells across 3 segments: instruments, systems, and services. Looking at the market cap, we can see it's about 191 billion. They do have a high PE of 62, but that is because they just grow into this PE, and it's been doing it for years. We'll look at that chart and look exactly how this company has progressed throughout the years. But I want to look at this beta first, 1.62, so a little more volatile than the market there. This thing is going to move about 1.6% higher or lower when the market moves 1%. Look at the industry rate. We are in the top 37%. So better than your average there. Let's look at the next screen and look at this recent quarter. And we can see that huge pop. The stock was trending down, but we got the massive earnings beat and guide higher, 20% higher. And as you can see, this company was always beating, but this quarter was really a standout comparison to these other ones. You can see their single digit beats. There's a nice double digit, another nice double digit, kind of topped out with that 24% beat. But here, the numbers were really good, and as you can see, the market wasn't really expecting it. We were selling into the number. A little bit more about those numbers. The guidance is raised, and now the company is expecting faster global procedure growth and higher margins for 2025. That procedure volume surged 20%, and hospitals installed 427 new Da Vinci systems, expanding global installed base by 13%. The new Da Vinci 5 system is driving an upgrade cycle with strong adoption and higher usage across multiple platforms. Now, looking at estimates, what are these analysts saying? We're going to scroll down here and see that many of them are taking estimates higher. You can see in the last 30 days since earnings, we've gone up. There are some that have taken down, but for the most part, everybody's in agreement and taking them higher. And this leads to the numbers going significantly higher here across all time frames. So pretty good traction there when it comes to the estimates. And with that, we're seeing some price targets being lifted. Truist went up to 620, UBS up to 600, and Raymond James at 603. So let's look at the chart and see exactly what this stock has been doing and where it's going. I remember trading this when I was a young pup all the way back in here when the stock was breaking out. It's one of the first robotic companies out there that has been kind of doing what everybody is excited about now. You can just see how this stock has just taken off, especially in the last 5-6 years. We do have a setup. If you guys follow what I do with Fibonacci's, lows to highs, come down in this halfway back twice now, and we're expanding up. I like this to get to $700 perhaps sometime early next year. Let's zoom in and look at a shorter term time frame. We're going to look at these moving averages. The red is the 200-day, blue is 50, and green is the 21-day. We can see we had the death cross here, and we saw that trend down, but we definitely broke the trend right before earnings, and it looked like somebody knew something was going on, and we popped higher to 550, pulling back a little bit, and a 200-day test. If this holds, I would be a buyer for a move higher. If we get a broad sell-off, sure, we can come down here and test 2150-day, but those are going to be your levels. The gap fill, 50-day, the 21-day, and the 200-day. I want to be looking at all those. If we don't get down there, or if we come down real quick and pop back up, over that 550, 560 level, this thing gets really interesting. Okay, that's prior resistance right here at 560. We topped at 550 on the earnings move. I'd be looking for this extension at 161, the 161.8% at 628. So beyond that, we have that longer term target, but that's all time highs. I could see a move coming here into the end of the year, pull back to buy again into 700 at some point next year. So a lot of meat on the bone, even after this move higher after earnings. Man, Intuitive Surgical has the fundamentals, the technology, and the momentum. And with the Da Vinci and Ion expanding globally, and with analysts on your side, I think this is a good stock to own into the end of the year and early next year. Okay, that's it for me and Intuitive Surgical. Here is Ethan with his pick.
Thank you, Jeremy. For my top stock pick of the week, I'm going to be taking a look at Amazon. Amazon has numerous bullish tailwinds and just last week reported an extremely strong quarterly earnings report. So let's get right into it. So Amazon is really kind of a bellwether for the broader economy and the stock market. On the one side, they have their e-commerce and retail business, which is very representative of the consumption side of the economy. And with Amazon Web Services, its cloud computing business, it is also representative of business and enterprise segments of the economy. So with those two businesses, it can really tell us a lot of information about what's happening in the economy. And at its most recent quarterly earnings report, we learned that both of these business segments are doing very well. And there's really very little reason to expect anything more than good results for Amazon going forward. Interestingly, Amazon had sort of fallen out of favor over the last year or so. Let's take a quick look at the stock chart. So, yeah, we can see that there was this consolidation in the stock, between summertime and last week. I had written an article ahead of Amazon earnings highlighting this consolidation. And you can see there was a massive gap higher on that earnings report last week. And we broke out of this consolidation and the stock made a new all-time high. So you can see that the stock really struggled this year. It was a major laggard in the broader market and against the Magnificent Seven. It was only up about 5% on the year ahead of going into this earnings. Even if you zoom out farther, it hasn't been an especially good few years. After the 2021 highs, the highs was 185, and it was only $220. I mean, yeah, it made nice returns since the lows in 2023, but the stock really had fallen out of favor. And interestingly, the business was still proceeding very strongly. It was hard to explain why it didn't do well. I mean, it was growing its sales, it was growing its earnings, but it was possible that maybe new CEO Andy Jassy, who is not founder Jeff Bezos, was having trouble getting investors excited. But this earnings report was, I think, a major catalyst, and I think it really jolted investors to start paying attention again. So I'm just going to quickly look at the earnings report from last week because it was really impressive. So the company grew its sales. It beat on both earnings and sales estimates. Earnings were up 36% year over year and 16% quarter over quarter. And revenues were up 13% year over year and 7% quarter over quarter. So the business is running really strong. Especially notable was that Amazon Web Services, which have been growing, nicely. 17% is a good annual growth rate for a big business like this. But Andy Jassy noted that we're seeing momentum and growth across Amazon AI and meaningful improvements. Okay, so Amazon Web Services growing at a pace we haven't seen since 2022. It's reaccelerating to 20.2% year-over-year growth. That's a major development. And, a lot of that is just pulling in more AI spending, which is extremely compute heavy. So they've had a long-term deal with Anthropic, which is the second largest AI, large language model business, which has been great. I'm sure they're integrating the technology into their business. And we also, and then just this morning, Amazon signed a major deal with OpenAI, the leading AI and large language model business. And they signed a pretty big $38 billion compute deal, Amazon and OpenAI. And they're going to basically be using Amazon Web Services infrastructure immediately. So there's a lot going for Amazon right now. Another interesting development is that even though the business is performing extremely well, the stock is now breaking out. They're actually laying people off. Last week we found out they would be laying off 30,000 corporate employees. It seems odd, but a month or two ago we heard Jeff Bezos talking about how excited he is about AI, and that it's basically his sole focus right now is focusing on leaning Amazon's business out and integrating AI as effectively as possible. And there's a lot of room, in all businesses to increase the efficiency, which is going to grow profits, basically. And I think we're going to start to see more and more businesses, and I think Amazon's going to be a leader, really cutting, improving business processes, cutting costs, and really utilizing the AI technology going forward. Also, Amazon is one of the leading robotics businesses in the world, and I think all of that plays to tailwinds in the business. Also notable is its Zacks rank. It's got a Zacks rank 2 currently. Earnings estimates are trending higher. They've been trending higher since April. Not extremely rapid, extremely strong momentum, but they are trending higher. Near unanimous upgrades, just 2 downgrades for the next quarter earnings, but everything else, 11, 10, 14 analysts have upgraded the stock. Not huge upgrades, but they are trending higher. It was current year earnings estimates were $6.79, then 2 cents higher, another 3 cents higher, and then 14 cents higher. So the trend is beginning to pick up, and I think people are seeing the potential in Amazon's developments recently, and just how sort of they weren't necessarily paying attention. And at 35 times forward earnings, Amazon is about the cheapest or most reasonable. I mean, it was a little bit cheaper, in April and before this earnings, but 35 times forward earnings is quite reasonable for the stock, especially for Amazon historically. And you can see they're expected to grow their earnings 22.16% annually over the next 3 to 5 years. That is really fast. This is a huge business. It's a $2.5 trillion business, and they're going to be growing their profits over 22% annually. It's just so impressive. All of these Magnificent Seven stocks are so big and have such scale, but they're still able to grow their profits so quickly. Amazon, this is actually the second fastest earnings growth forecasts for all the Magnificent Seven. It's only behind NVIDIA. So, a lot of this I think is going to start to get investors interested in Amazon again. And clearly, like I said, this earnings report was a big catalyst. And then today, you see there was another gap higher. Stock's up another 4.4% today on that OpenAI news. So, it can be difficult to buy a stock after it gaps higher like that. But don't forget that Amazon stock has really been languishing over the last year plus. And I think it's going to go from a laggard to a leader, and there's going to be some catch up. Now, for investors who are maybe, uncomfortable buying on a new high, these kind of gap up on news tend to be a favorable setup. I tend to like them. Our post-earnings gap up is like a defined technical pattern. Sometimes I use this tool here. It can help you create a little forecast. So just helps visually. We might see some kind of a flag build out an Amazon stock here. Maybe this gap gets filled over the next few days, but I think we'll eventually see, maybe over the next 2 weeks, maybe it'll be a month, maybe it'll be just a week, but we're going to see a consolidation in the stock. We're going to see it trade sideways, and I think we're going to see it trade higher again. And, if you do enter, after this gap up, I think the first level of risk is here in this gap, then this other all-time high around $242. Thank you, everybody, for tuning in. I hope you found this video valuable and interesting. If you enjoyed it, please subscribe to the channel, and also check out our most recent promo at zacks.com/promo.